Good morning, everybody. Welcome to F.A.C.E. Happy New Year to everyone that we haven't spoken to since the holidays. Hope you're doing well. Just a bit of news to bring you at the start, unfortunately. Dale is no longer with us anymore. He resigned this weekend, a bit of a shock to everyone. We were just all teed up for the launch of Trading Analytics, and it was all looking good, and we got that notification yesterday. So it's been a bit of a shock. We're just caught a bit unawares. Hope he's all right and everything. So we've got a little bit of a hodgepodge show this week. Blake's actually out for the first part of the show, but he will be conducting the interviews for the rest of the week, and we'll have usual bods on through the week. Kman's here as well, so I'll say good morning to him. Morning, Kate.
Hi, good afternoon for us, right? Good morning, everybody. Yeah. And for those who we haven't spoken to yet, Happy New Year. Hope that 2026 is going to be a healthy and a peaceful year for everybody.
Yeah, absolutely, mate. Can only echo those thoughts. So, I know this is a big shock to everyone. It's a big shock to us as well. So, we're all still reeling a little bit from it, so you'll have to bear with us while we get things sorted for that. Right, anyway, let's get cracking. And for those just joining us, particularly in the US session in the Americas, obviously we've got this news of Venezuela stuff going on, which hasn't had too much of a market impact, though maybe we've seen a little bit of reaction out of the US. Now you guys are coming to the table to play. Looking at stocks at the moment, and holding pretty steady. See a little bit of a move, but nothing much to take home from that. They're holding up fairly well. This is something that's going to be playing out over the days ahead. I believe Trump's got a press conference later on today, just in case he decides to announce what's going on. Any other plans? For those that may not know, Trump went steaming into Venezuela, took the guy in charge, Maduro, shipped him all the way back to the US. He's facing a court case. There's an interim person in charge there now who started talking a little bit along the same lines as Maduro and against the US. Trump put her in her place, saying she needs to toe the line or she'll face a worse outcome than Maduro. And then she sort of swung around to the thing. So it's all been a bit of a quick incident, if you like, over in mere minutes, really. And the market pretty much taking that to heart, that this is not some long drawn out affair. Obviously, you've got to see the ramifications of that, what happens with other players such as China, Russia, who have heavy influences there. They've got the oil trade to talk about as well. So there's going to be lots of news around this for the coming sessions ahead that we need to pay attention to. But as far as market moves thus far, it's all pretty much tickety-boo in markets at the moment. Kay, I was having a look at yields earlier, just keeping on US yields. Again, nothing much going on. We're still banging up against this 420 level. We've seen a bit of movement in the yen, maybe some risk play there in FX, but elsewhere it's still pretty calm.
Yeah, it's calm, and if you look at the yields, really, I think that for the bond markets, it's going to be the first day back to school, right? For them, they have the bond players have managed their books into year end, steepen the curve a little bit, and now we will have to see what's happening. There's a bit of a, if you take away geopolitics, there's a bit of a play going on in markets that the new FOMC governor in place should be bit of a yes man. That's what the market expecting at least. But then against that, we're looking at whether the US is going to get as many receipts from tariffs, and also how much is the funding of AI and other technology advance going to need funding, which is massively, as we've already been picking up in 2025. So the theme of the start of 2026, which is a bit of a continuation of what's already been happening at the end of 2025, maybe one of a bit of um, a steepening curve in the US, where the shorter end remains relatively subdued, and the longer end seeing perhaps a bit of a further stretch, which could lead those 10-year and whatever is above, whatever they need or want to put on as tenors for their funding, maybe putting a little bit of pressure on the bonds. So in the longer end, so that's kind of where the market may start the year with. So could be that we are going above that 420 in the tens, while the short end remains let's say anywhere between 340 and 355 or so. That is for the yields right now. As for what's happening on oil, so this Venezuelan thing, there's a lot of ink already spilled over what really is the aim of the game. We have to know that, yeah, everybody knows by now that Venezuela is has a lot of oil in the ground, but it's an expensive one to dig out, and it's going to take a long time if the US wants to get access to it. It's going to take a long time to get profitable as well. So in my opinion, it may not be the main game, but what the main thing is, and there's been a few articles written about it as well, is the influence that China, Russia, even Iran have in Venezuela, and it's all getting too hot and too close to US's door, and that may be rather the plan, and the drug the drug thing being more the excuse, although it's a horrible thing, of course, but might be the more the excuse for the U.S. citizen to accept why the Trump administration and the Pentagon went into Venezuela. And adding to that, as I already said, this Chinese, Russia, and even Iran influence in Venezuela is has a lot to do with what else is in the ground there. Access to rare earths, access to minerals, access to um, yeah, I mean, what's in the ground there on the American continent, of which Venezuela has a lot as well. There are quite a few organizations from those countries in Venezuela, so it's kind of the influence sphere again. That is rather, I think, the main thing that is happening there. But obviously, right now, oil came off a little bit, but it is actually stabilizing. We will see what the US market will wants to do with it, and then also what it wants to do with the dollar, because the dollar has been relatively bid, and I would say then especially against stuff like the euro, and it's actually we're trading on the lows of the euro dollar. Um, I'd say a bit, maybe a bit of safe haven dollar buying, but I don't know exactly whether this bid in the dollar is going to be maintained. I'm rather looking at stuff like the metals, for instance, gold picking up that bid since the start of the Asian session, and silver as well. Those may be the instruments where the market is going to focus the most on, especially that this incursion or this taking away Maduro is might spur some reactions from the Chinese Russian front.
Yeah, yeah, it's going to be interesting because obviously this time of year can be a bit funky as well, because it's New Year, everyone's back from the holidays, any repositioning, putting on new positioning needs to happen. You can look at gold and half throw the excuse at it that we had a bit of squaring up into the year end, and that might just be coming back on now. But Trump's also you know, he's potentially set sights on Colombia. He's had a dig at Mexico. He's talking about Greenland again. Hence why this thing is going to probably run on for a few days, if not weeks. There's not been any real pushback from the likes of China and Russia, by a bit of lip service, but that may still pick up. So yeah, this is something that we've entered the year with, and we're going to have to deal with for a while. Either something happens or the market just completely ignores it. But it's one of those situations where it doesn't matter until it matters, and then we'll all have to trade it. In the meanwhile, we're going to hit the ground running this week because it is a busy week on the data front. We've got the ISM manufacturing today, services, ADP, jobs on Friday. So it's going to be, we're going to get back to the central bank trade, at least the Fed trade, pretty quickly. As Kay mentioned, we got the Fed chair. End of the month, we got the potential another shutdown. So anyone thinking that we're going to have a nice, easy run into the new year, nice easy start, that's been blown to bits a bit, Kman.
Yeah, it could have been an easy start, but yeah, I think I'm not sure actually whether we are going to get like big surprises on the employment front, but it's for sure going to be one that in the mix of everything else that's going on right now, and we may. Shouldn't we hear from the potential Fed governor being named as well? I mean, the FOMC head. That's also still in the pipe. So yeah, it could be a bit of a busy week coming, especially as we know that the Fed is watching those, and the whole market is watching the employment situation in the US as well. Whether we are going to see a further deterioration or whether it all has been a bit of a vague or loose alarm for a few months.
Yeah, absolutely. So what are you making of the year at the moment? Because obviously, again, it's, you know, it's been looking strong for the last couple of months. It's been strong pretty much all last year, but you know, we've had this bounce late November. We've had it coming off a bit now. Is this just again the market just doing a bit of New Year repositioning, or are we going to get back on the bandwagon and see further gains?
It is quite worth noting that euro. It's not only euro dollar coming off. It's euro crosses as well. We have seen euro sterling. We have seen euro yen. We have seen well, euro Swiss had a bit of a blip higher, but now it's coming off as well. So it's a bit of a global euro thing going on right now, for which I don't really have too much of an explanation. I can hardly see the new edition, which was made official. Oh, correct. Well, help me. Which country just joined? Oh, the Bulgaria, right?
Bulgaria, yeah.
Yeah, they just joined the euro. Is some of it weighing on it? But it's a 3.5 million people economy. I don't think that had should have a big impact on the euro. But it's noteworthy that euro crosses are coming off. Is it just, yeah, early year flows? Could be, but it's one of the weaker ones against the dollar for sure this morning. So we never know how long it will last. I personally think that it shouldn't last for too long, and we should be kind of finding some demand, whether it be 116.5 or below in the euro in really short term. But then to take it the other way is going to be another question, because it seems the market is not really. It's there's a lot of things pushing and pulling. We have seen that bid in the cable, but now it's seemingly fuzzing away as well. Um, why the dollar should be really strong in current scenario? Yeah, the usual correlation, geopolitics, stronger dollar compared to risk, a bit of safe haven, but then there's no safe haven anywhere to be seen in equity markets or in the bond market, for instance. So, yeah, I must say that I don't have the answer to the why exactly the dollar remains strong right now.
Yeah, I think for as far as the euro is concerned, you've got to take it in its context. You know, it's certainly holding the gain that it made all last year. Couldn't even get close to the 38.2.
Yeah, we're still in a range.
And yeah, but since, well, you could probably call it since May, June, over the summer, we're in a bit of consolidation, shall we say, 300, 350 pips between 115s, 118s, with the odd blow through. So yeah, I think it's decision time. What could, on the euro side, what could get this moving? I mean, we know that the ECB is sitting on its hands. It would like to sit on its hands for the foreseeable future, but the data's obviously got to start playing ball, or they might have to cut again. What could cause it from the euro side to see the euro rising? Could we get a pickup in inflation, perhaps, that might get them a little bit hot under the collar, or will they let that slide?
I'm going to say that the most important thing for the euro to pick up again would be finally Germany with what they are spending, starting to stick their head above water again. I think that's going to be a key, for as long as they fail to show growth, and we've seen up until the end of last year the revisions, Bundesbank not optimistic on the growth. We have seen all those economic bureaus in Germany, even the government, always revising growth lower. That, I think, for the euro to really advance, if it's not coming from the dollar side, we're talking about the euro here. For the euro really to advance, I think Germany is the key. If they start to grow again, then I think the euro will really push on. That's one of the things that really the catalysts. I think that one of the catalysts that we need for the euro to push on. And then you're talking about the euro, which is probably going to do better on the crosser side of things as well.
Yeah, and that's probably going to be a bit of a drag on the yen as well, or the yen cross, shall we say?
Yeah.
Because dollar yen, that's holding up there again. There's certainly no Bank of Japan influence, and the fact that Ueda was speaking out over the last day or so, talking mildly hawkishly, shall we say, keeping further hikes on the table, although when they happen is another question. But this 157 level is proving a bit of a tough nut at the moment. We've had these moves above, we've had runs to the high 157s, but we can't hold above there for any significant amount of time at the moment.
Correct. That is correct. I think the level is starting to shape up as a bit of a kind of a decision level. And if you look at it, top side and bottom side. Of course, the bottom side is a little bit further away. We've been talking about that on the flow show too. If you look at it for the bit of a medium term, this 154.5, 155 is going to be important. But then if you look at the top side, we had that spike up to 158.90 in November, then another one in December, and then a little longer term we had that move up into 158, which is already a year old now. But it does look that on either side of the spectrum, we are going to have to break something for the dollar yen to decisively pick a direction. Now, the thing is, again, and I've been reading about that, and actually we've been talking about that on briefly on F.A.C.E as well over the last days of the year. Again, people are starting to say, like, yeah, I mean, this is maybe the year where we get another drop off the cliff of the famous carry trade. But again, I want to see. I would like, well, not I would like to, but I want to see it happen still. I mean, and I'm still waiting for it to. Is it really going to happen? If we have a very slow hiking Bank of Japan, and the measures that Takaichi and our government are putting in place still need to be activated, right? So for as long as we don't have like two conditions, which is for me, the rest of the world is falling apart. So that may be depending on how the reaction will be after this Venezuela thing. But then we also need better and stable growth in Japan, which is looking at the demographics, not a done thing. But it could be second part of the year. Now, for what we have seen in the markets, because the people were talking about it, oh yeah, with the Bank of Japan hiking, the carry trade is dead. It's not dead. I mean, it's been very undead for the past 2 years when Ueda took the helm, right, from Kuroda. It's not dead yet, that carry trade. I still want to see it happen before it really happens, and there need to be some conditions fulfilled, and those conditions may have to wait until the second part of the year, maybe.
Yeah, I mean, it's one thing to say that the carry trades may be narrowing, things like euro yen, dollar yen, but when you look at some of the others like mex yen, there's still plenty there for carry traders. Carry traders don't close up everything just because of a
Uh,
25 pip move. There's
and
particularly when there's big margins still in the trade.
yeah, and carry traders will get a wake up call. But if you are in a longer in if you really are in longer term carry trades, just take for example that mex yen. Now with the mix, it may be a little bit hot, feeling a little bit hot because of stuff going on in South America. So we may have a little bit of rethinking to be done. But even through an intervention, those people have sat firm and kept their positions. So I mean, it's people talk too rapidly and use the term carry trade too loosely. Okay, there's one thing of being, let's say for instance, we were talking about that this morning, long sterling yen, and you pay away, I don't know, half a pip a day or something, and or long euro sterling, I mean, and it's the funding is hurting a bit after, but it needs to be a long while. If you're short yen and long other currencies with decent interest rates, a carry trade is not always, or not, as I say, majorly based on the funded currency declining. It is rather to take advantage of interest rate differentials. And if you sit on an interest rate differential of 6% per year, if you take it into dollar yen terms, your dollar yen has to come down nine yen or so, on a year's time for your carry trade not to work anymore. And what happened over the past year, it's actually gone rather the other way around, right?
Yeah, absolutely, absolutely. And I think that when a lot of people talk about the carry trade, like you say, it's maybe a bit of retail thinking that if something changes, you've got to jump ship straight
Mm,
away. These people have been riding this for months, if not years.
yes.
And the smart people also be hedging along the
Mm,
way as well.
mm.
Buying out the money puts or whatever they want to do,
Yeah, absolutely.
um, and locking in everything behind them. So it's not the end of the carry trade and everyone's going to rush to the exit. That's
Mm,
just not how it works. That's just not how big smart money works.
yeah,
Particularly if it's been in for a long while.
yeah.
So
And actually the opposite may have been true. Too many people trying long yen because of hikes in Japan, because of cutting from the FOMC without really looking in the details of the bigger picture, and yen actually still being a very very much a funding currency, and it's been the case. Yeah, looking at a lot of currencies versus the yen, and I'm not going to call the death of the carry trade until I really see it happen.
yeah, exactly. I think that's something we have to be careful of as well coming into the new year. Everyone's out with their forecasts. What's this going to do? What that's going to do? And you get people who just want to get clicks. They want to make big calls. They want to make massive calls, because no one's going to give a monkeys if it didn't happen by the time we get to February, March, June, July, whatever. So if you're trading coming into this new year, don't get caught up in the New Year's hype that we can get. As I say, people making those big calls. Just watch markets, let the dust settle for the first week or so of the new year. Let the themes reassert themselves, what the central banks are going to do. We know the big events, as we listed earlier, that's going to come. New Fed chair, we got this stuff going on with Trump, Ukraine, all this sort of stuff. We knew about it before the holidays, and it's still in play after the holidays, and we'll be trading that all again. One thing I was going to ask you, Kate, volatility. We saw, and maybe it was just a bit of end of year stuff. We saw volatility, particularly FX, dropping pretty markedly. Are we headed that way now that we're going to get more central banks coming down to close to their neutral levels, and then hopefully, or they'll be hoping that they can keep rates steady for a period going on?
Again, I think we are going to need a catalyst to unlock the situation, because and it may be, unfortunately, geopolitics again. But if you look at central banks, they are not really there to unlock the FX option vols, lower vol that we have now, because a lot of them are in a wait and see attitude. And imagine that we get lukewarm data which are close to expectations, which are, again, if the European growth being sluggish but still a bit growth, and but then the US continuing to show kind of neutral to okay data, that's not something that that unlocks a volatility in the FX sphere. I mean, stocks may be different, okay, but I'm talking about FX here. So we are going to need a catalyst, and unfortunately, the catalyst may be geopolitics again if something really stupid happens. Or we are going to need to see, and for FX option vols to go markedly higher, it's probably going to take bad news. And bad news, I mean, for instance, the US job market declining, because people saying that AI is creating jobs, I still want to see it. I don't think so. I think we are going to lose more jobs, and that may be one of the catalysts to unlock the FX option, the low vol, because the thing is, a low vol in FX options is a bit of a death spiral, is a bit of a vicious circle that people are creating, because it's too easy, too cheap to buy options. So that means that you're actually feeding the range trade, and locking things in even blocking the market even more. So yeah, we are going to need something here. But we've been in periods like that in the past. I mean, I've been in the markets for over 40 years now, and we've seen periods and prolonged periods of low vol, but there's always something that is going to unlock the situation. So
Yeah.
patience.
Yeah, absolutely. And, low vol, you just have to learn to trade differently. If you get tighter ranges, you can play range trades more. You've just got to adjust your expectations for trading. If vol is low, you can't be expecting the euro dollar to be rallying, dropping 80 pips on a inflation print. But you can pick up your levels in between, and you just end up doing more trades, but on tighter ranges. So there's always ways to trade it. No one likes low vol, but that's what happens. That's how we have to trade. Hi, Mish. Got you there. Blake's going to be along shortly. He'll conduct the interview with you. I'll promote you soon as well. Steve's here as well. Happy New Year, Steve.
Happy New Year, everybody. Yeah, I just arrived. Unfortunately, I got delayed at the vets.
How are you?
Now, I'm good.
Are you okay? Did you need your vaccines?
No, I took my wife to have her vaccines.
I'll let you deal with that. I hope she doesn't see the recording.
Oh, she can hear me. She's next room.
Okay.
She chooses not to say anything.
She's got one of those big cones around her head, has she?
I heard you, Kman, say something that AI is supposed to be creating jobs. We all know that obviously that's not the case, right? Imagine if AI was actually creating jobs, that wouldn't be that beneficial. But in fact, AI is meant to do the exact opposite.
Exactly.
Is to render tons and tons of jobs as useless, right, with today's standards. So obviously AI is going to generate some very specific dedicated jobs, but it's going to be a fraction, a very, very small fractions in comparison to the jobs it's going to be destroying, right? And listen, objective reality is not always pleasant. Nobody currently is mourning for all the people that lost their jobs a century ago because the job was driving horses or carriages because we got the car. I mean, like it or not, technological and economic development has always been the same. There is always going to be something new, create all the workers that were needed to shovel things out, and now we have ground moving machines, right? So unfortunately, this is the economic reality, and of course, AI came to replace a lot of people doing several different type of jobs. So it's meant to increase productivity, but unfortunately, part of increasing productivity is reducing cost of labor. Jobs. So I agree with you, Kman. One of the things that is going to bring a huge change to the workforce is definitely going to be the developments in AI.
Yeah, that's my feeling as well. And then I just want to see how central banks or even the market reacts to it, because it has other ramifications. Yes, you're going to increase productivity, increase how should I say, efficiency, but if you get rid of a lot of a lot in numerical terms, maybe in percentage, maybe not that much, but if you get rid of a lot of the workforce, it has a lot of other ramifications, as in spending, etc. So households,
Absolutely, and I
I'm
think
not I'm not an optimist
inevitably,
on household spending in 2026. That's for sure.
yeah. But one force that has remained in place that definitely affects most, more than the developments in AI in that respect is obviously inflation, right? Which
Yeah.
keeps reducing and reducing and
Okay.
reducing the purchasing power of people, right? And instead of actually addressing that, we are in the process of doing the exact opposite at the moment, right? We are in the process of ignoring it and stepping further on the gas, despite inflation still being much, much higher than the target. And imagine if we measured it honestly. And
That's not how it works.
yeah, and obviously, this is not going to help with inflationary pressures because I do believe that, of course, no matter the pace at which we're going to be moving, we're definitely going to keep moving in the direction of easing at the moment, right? Because it's what governments need, not only what they want, but what they actually need.
Yeah, very much so. And I just see Blake popping in up the top there. So he's backing in, and he's going to conduct the interview with Mish. Mish has been promoted, so welcome to F.A.C.E again. And over to you, Blake.
Hey, good morning, everybody, and thanks for kicking off the show, Ryan and Steve and Kman. Really appreciate you guys. Mish, Happy New Year to you.
Happy New Year to you and everybody.
Yeah, so it's good. It's good to see. I'm gonna go ahead and take the screen from here. So thanks, guys. And we're gonna get started with talking about what's moving. This new year, and I mean. Let me ask you this about Venezuela. Did any of that catch you off guard over the weekend? And if it did, what are you thinking right now?
Well, it didn't really catch me off guard for a couple of reasons. One is Trump tends to be pretty transparent about his intentions, whether he actually achieves them or not. Usually, at least we know he gives it a good old college try. So he'd been talking about Venezuela for a while. Now, of course, he's talking about Colombia, Cuba, Greenland. So we've got to keep our eyes on all those things. And secondly, in terms of the price in the market, we were starting to see XLE and that whole energy space move up last week ahead of it, which also kind of gave you a clue, because we know, right? The market's always smarter than we are. The price is what really kind of gives you the heads up. So yeah, now we're here. So let's see what happens from that point. I mean, one of the things that you and I was having sort of a deja vu, Blake, about last year and the year before, and I think even the year before that, was our January conversations about what the year of is according to Chinese astrology.
Yes, yes, and you put together a big presentation regarding that. Yes,
I did. And you know, what's so interesting about this year is that, of course, it doesn't start officially until February 12th, but it is the year of the Yang Fire horse. And what's so interesting about that is if you think about last year, which was a water snake, the snake basically did exactly what snakes do in terms of the market. I mean, it coiled, it hissed, it jumped, it went peacefully, and it wound up shedding its skin. That's what we're seeing now, making room for this fire horse. Now, why is that interesting to me? Number one is we haven't had a fire element in the market since 2018. It's been water. Fire generally means a lot of volatility, but a lot of risk taking, a lot of prosperity feelings. So we're already starting to see that. And secondly, if you look at the nature of a horse, they tend to gallop and they tend to buck. That's where the volatility could come in. And of course, these are metaphors, but they make sense. And finally, if you look at the last time, Blake, that we had this exact same situation in terms of how the elements and the animal all lined up, it was 60 years ago.
Oh, okay. Now I'm going to have to go look at it 60 years ago, what it looked like historically.
Oh, well, I can give you a couple of real big highlights from 66, right?
Yeah.
1966, first of all, we had the Chinese Cultural Revolution. Now, if we look at 2026, China's very much in the news, not just with Taiwan, but really what's going to be the backlash of what's happened here with Venezuela and our sort of putting our foot down and saying, this is our territory, stay out. In 1966, we had the Vietnam War escalating. Well, certainly, again, going back to geopolitical situation, we could start to see some types of escalation depending on how bold our country remains. And another really big area in 1966 in terms of innovation, we had number one, the artificial heart was invented and used for the first time in 66. So
Wow.
biotech is a real big area to look at. In terms of media, it's so interesting. Disney died in 66, and now all of a sudden Disney is a stock that I really have on my radar for this year. And culturally, let's just talk about the Cultural Revolution. Forget about the Chinese. I mean, in the United States, it was really the start of a younger generation rising up and saying, we don't like the status quo, right? I mean, you can call them hippies or whatever you want, but it really impacted music, art, culture, and politics. So we may see the Gen Z and younger become more active because they have been very quiet. So I love all of that because it gives you sort of an idea of kind of what to look for and not be, like you asked me at the startup question, too surprised at whatever happens.
Yeah. And well, you know, that last point you made about the Gen Zers. I mean, this is I have nephews and nieces that are in their 20s, mid 20s to early 30s right now, and they are very hopeless. I mean, you know, the ones that don't, and there's a couple that actually don't own like homes, that, you know, they're just getting killed by inflation. They're definitely on the wrong side of the K-shaped economy. And you made a point that they've been relatively quiet. They have been. Do you think that's going to funnel its way into U.S. politics? I believe it's going to reshape U.S. politics over the course of the next decade. So what are your thoughts there?
Well, just let's take a look at New York, right?
Yeah, yeah.
Mondami, I mean, he's 34 years old, and he was definitely put there by mostly younger generation. They were very excited about having somebody young and somebody who's talking whether or not he can actually achieve any of this, but more of a socialist type of agenda, really, because what the young people are thinking is, we need help. You know, we need help with the job market. We need help with housing, as you mentioned. The cost of things are high. So that could be something that could percolate as we get more into midterm elections. We'll see. And that, by the way, is another real volatility maker in this year and every midterm election. The markets tend to get jarred. And by the way, in 1966, it turned out to be a down year. And so even though we've got some major bullish type of calls for this year, we don't really know exactly what's going to happen. And that's so far away. All I know is for right now, we have a couple of interesting things to look at. Number one, of course, is just to see, I heard, I guess it was Kman say that you have to really kind of be a little bit patient here as we get into January. I think you want to look at maybe the first 10 trading days, you get a range, and then you can see what's going to prosper and what isn't. But, you know, it's all the same things. We're going to watch the dollar. We're going to watch the rates. We're going to watch inflation numbers. We're going to watch, obviously now, oil and the impact of that. And right now, all my Modern Family members are sort of sitting there, sort of waiting to see what happens next. Like I'm really looking right now at IWM, because if we're going to get any kind of real economic growth in this country, we need to see those small caps can not only continue to hold up here, but rocket to new highs.
Yeah, wasn't it funny that IWM or the Russell 2000 used to be the mid caps, but now they're just pretty much the small caps. Like everything's the small cap next to Nvidia and the likes.
Yeah, although there are still some small and mid caps, and what's interesting is one of the things that Market Gauge has is a lot of algorithmic models, and the small to mid cap model that's based on earnings got out of a lot of tech and more into some of the consumer space, especially the vanity space, which of course, you know, I've been all about that, which is the domino effect from the diet drugs and a new thinner generation that is coming up now because of them. And of course, the big news last week that Novo Nordisk has it in pill form, which makes it more affordable. So they're getting into stocks like that and less so into the smaller cap or mid cap tech stocks. I think that's interesting too.
Yeah. That is, you know, let's dive a little bit more into the markets. Like when you've been a precious metals bull for like literally for the last several years, but even the times that I've had you on, me personally, and we've talked and we've had discussions, you've been extremely bullish silver, extremely bullish gold, but the price action the last couple of weeks, has that deterred your thoughts after such an epic run? I mean, like I said, you've had some epic calls over the last couple of years. I know it's easy to look back and say, well, there's a lot of, you know, precious metal bulls out there, but you were, you know, specifically very much so. But how do you feel about precious metals where they currently reside?
Well, first of all, let's go back to our year of the double fire horse. Technically, that tends to be bullish for metals. So I don't think that we're going to see any kind of major correction on either the silver and gold, but that doesn't mean that we can't go through a period of consolidation. I'm still bullish. Silver got to 75, which was my first target, by the way. And so I'm not surprised that it overshot and now is kind of trying to figure it out. It's trading at around, what, 74 right now as we speak, 74, 75. And gold, my initial target was about 4,500. So we kind of got there. So I think right now I'm looking more range bound, perhaps a little bit, but I would not discount them going higher. I actually started buying more crypto last week.
Really?
Yeah, the whole company bought IBIT. I bought it personally as well, but also bought XRP and Ethereum because I believe now that, well, I saw it as what I was calling a coiled spring, because you were getting that range between 85 and 90,000 in Bitcoin so tight with so much whale buying and whale selling, and the volume was increasing. That's exactly the type of physics you want for something more explosive. And now we're up around 92, 93 in Bitcoin, and you're looking at XRP, right? It's at about 211, 212. I think that that we may see some of the speculative money. Remember, this is a year where speculators are going to feel bolder coming back into the crypto market. We certainly have a ton of legislation coming up that's really going to impact the market in about 10 days. There's going to be a bunch of votes, not only on whether or not strategy, formerly known as MicroStrategy, stays in the S&P 500, but what happens with the SEC. We know that we have a very crypto friendly administration. So I'm not saying I'm not bullish in the metals, but if you're looking at something in infancy, and I know that sounds strange when you're still at 92,000 in Bitcoin, but compared to where it was and its potential, I think we've got some there. Obviously,
All right.
yeah.
Yeah. So, well, the thing is, when I look at crypto, and if you're on the long side, you know where you're wrong. And as any trader, that's really all we want to know is where we're wrong, right? I mean, because we undoubtedly as traders are going to be wrong, and statistically you're going to be wrong at least half the time. So as long as you know where you're going to be wrong and you can manage that risk, that's the best thing. How about any individual names that you're looking at? What stocks are you looking at right now, Mish?
Well, one of the things that I do every year when I write my big report is I come up with mega trends, right? And then specific stocks within those mega trends. So there's a lot. So I'll see if I can run through it relatively quickly. So first of all, I do still believe that AI is a thing. I mean, I don't think that's going away. I don't see a bubble. It could quiet down a little bit this year. Earnings may not necessarily be as robust, especially in some of the hyperscalers as CapEx has grown. But yet there's still a lot to be looking at. And in particular, I really like hyper automation. So Serve Robotics is one. That's more of drone technology. That's really been doing well. SERV, right? Take a look at that. I really like that one a lot. We also like just the whole SMH space. I still think that you need to look at SMH in general, which is one of my Modern Family. We still say overweight. Now, that's interesting that it kind of failed that line that you put up there. But this would be exactly where a calendar range for January would come into effect. We already have a 1-day range. We want to watch that for an immediate move and then see where it goes in about 10 days.
Yeah, pre-market. I mean, we're bid up. We're actually trying to break out pre-market. So, and we have NEC. We have NEC today, don't we? We do. I think Jensen Wong is speaking, and there's going to be a lot of speakers today.
Right.
So.
And also, I think you got to. I try not to count too much on any one statistic, but ISM should be kind of interesting because it's going to give us some kind of an idea.
Oh, the ISM today. Yeah, today, the economic data.
Right, because it's going to give us some kind of idea of whether or not we really are in some kind of economic growth here in the US, because ultimately that's what this is all about, right? So I think that what's happening in Venezuela with oil is interesting. We know that Trump wants cheaper oil prices. Of course, being sort of a contrarian, I'm watching oil prices itself very carefully.
Can I stop you here, Mish, real quick? When you're talking about crude, one of the things that you're a technician as well, so I think crude's trading really heavy, and I know we're up right now. I'm going to get to an actual chart that I've got drawn all over the place. Let me get to it really fast. Here we go. Crude's been trading extremely heavy. Yes, we're up right now because I think a lot of people are thinking, wait, I shorted crude, at the open, maybe, after the news, after, the weekend events. Then they sit back and realize, oh, it's going to take some time for Venezuelan oil to get production to get online and for it to add to supply. So you're probably seeing a little bit of short covering, but overall I think crude looks WTI looks extremely weak. Do you think we actually break down eventually?
I look at that chart a little differently, Blake. I see a lot of bottoming action at around $55 a barrel. So obviously that would be the point, that if it breaks down, we could have a massive move lower. But if it doesn't, we have a tremendous amount of support. If you look at a shorter term chart, it looks like every time we've had a trough, it's been at higher lows. So we're seeing buyers coming in a little bit at little bit higher prices. And I'm really looking, if you really want to be conservative, $60 a barrel would be my number. If we can get a couple of closes over $60 a barrel, you know how that goes, right? The price always precedes the news. And we
Yeah.
don't know what that is, but we certainly know that we've got more than just Venezuela as a player in terms of the oil market. And even if OPEC Plus isn't the same influential body of government that it used to be in terms of governing the oil price, we still have a lot of problems in the Middle East. You know, Iran and the revolution that's going on in there right now, by the way, that here's our, you know, our sort of our fired horse, people unrest, people wanting to see change. And who knows what could happen with Iran? We were already seeing threats from the United States and Israel to Iran. So, you know, you just don't know. You just don't know. I mean, that's what makes this so much fun, because every day is different.
Wait, it fun and interesting and always exciting, as you are, Mish. And you know, I've known you now for probably a better part of 6-7 years or so.
Mhm.
And we've done a lot of interviews together. I've always appreciated your work. So I'm gonna pull up Market Gauge right now. Can you tell the traders what you guys do at Market Gauge? What's the best way to follow you? And what your Twitter handle is? I can pull that up actually while you're talking. So.
Okay, well, yeah, and I know that I had a lot more information to cover. So the good news is you can find it. So you're looking at the Market Gauge site. My Twitter handle, by the way, at X, it's not Twitter anymore, is at Market Gauge, which probably, if you want access to me and my content, is the best place to look. And so what I'm going to tell you is that my PDF is up there on my Market Outlook 2026. So the 10 megatrends, we only got to talk to about one, are up there. Yeah, there it is. So you can see that. I actually direct messaged you my Outlook this morning.
I have not seen that just yet.
Yeah. But also we do a lot of free content back at the site. We have, now I want to talk for 2 seconds about that picture you're seeing above my.
This one.
Yeah, this is the most exciting thing that's happening this year. We're doing soft launch right now. If you go to the Economic Modern Family on YouTube, we are bringing my Economic Modern Family that I've been talking about for 10 years already to life. So that's all the characters, right? From left to right: biotech, semiconductors, Grandpa Russell, Granny Retail, Crypto Bro, regional banks, and transportation. And yeah, I put the real me in there just for fun, but these are going to be our financial literacy this year. So this is going to be my main thing. So I just want people to look out for that. I'll be putting that out much more as our content continues to grow. But our intention is to have an avatar of me at the end that gives you actionable information after you see their emotional reaction in animation to whatever their market condition is that they're reacting to. So
you know what's scary? That picture, my porch of my home in McKinney, Texas, looked just like that house. I was like, I had to take a really good look at it, and I'm like, is that?
Oh, Blake, we went to your house and took pictures.
Yeah, it's so weird. Anyway, no, it's really.
That was
really
actually
neat,
Minnesota, believe it or not, because Granny lives in Minnesota. You know, I have a whole backstory because Minnesota, because of the Mall of America, blah, blah, blah. But anyway,
yeah.
If you want more serious content, going back to the website, because it's good for people to see what we're doing. Go up to where it says Market Beat. Can you go to where it says Market Beat? Yeah, go there. So every weekly Market Outlook, I put some out, is fantastic. Jeff and Keith do it. They're really going to be taking over more of the actual writing. Jeff is going to be doing more of the writing on the daily. But it also gives you a big trading plan, an actionable plan for the week, tells you what's risk on, risk off, risk neutral. It's a fantastic free resource. So that's something to look at as well. And, you know, of course, we have a million products and things like that. But nonetheless, that would be a good way to funnel is 1, look out for my cartoons, and 2, read some of our free content that comes out under our Market Beat area.
Awesome. Well, Mish, I'll tell you, for me, it's always a great pleasure to sit and chat with you and have these conversations. Make sure you guys all follow Mish. You know, like I said, she's a friend of mine, should be a friend of yours as well, and a follow that I personally have. Happy New Year to you. And I'm going to be reaching out to you probably over the next couple of weeks to get you back on the F.A.C.E show.
Okay, sounds great. Well, great to see you this morning, and thank you everybody who joined in.
All right. Have a great day, everybody, and good luck in your trading today. We'll catch you tomorrow on the F.A.C.E show. Have a great day. Happy New Year.